So I'm going to give you a quick example of some of the trades as they set up this week. So I'm going to look at the euro dollar here. You see some price tags. I'll walk you through some of these trades. And before I go on, I want to share a testimonial from a brand new coaching student that's going through this program that I'm describing to you. And again, they have a very limited amount of time. They watch the homework sessions at the end of each day. They put in about maybe 15, 20 minutes each night. And they follow the homework that I lay out for them and the trade plan. So this brand new coaching student gave me an update today and told me that he's cleared $4,700 so far this week. He's earned approximately 161 pips on 4 trades, and he trades 3 standard lots each time he executes a trade. And again, the stop loss, we had a stop loss that was just barely 55 pips on most of these trades. All the rest of them were smaller stop loss. So when I talk about knowing what days to trade and what days not to trade, this is the euro dollar and this is the daily time frame. So I'll give you an example of something that I did this week on Monday. So my coaching students, when I was analyzing at the end of the day on Monday after the close, we had a candle that looked like this. We had this bullish engulfing candle, and I said I can see that price is likely to go up. We had some specific targets. We also knew where our entry was. But I also mentioned that the following day, which would have been Tuesday, I said it looks like it's probably going to be a slow and a flat day. Very, very small trading range. So I'm not going to trade the euro dollar. And then my coaching students know not to trade the euro dollar. This is what happened the following day. Sorry about that. It was a pretty flat day. We had a high there at 93 and a low at 65. That's about a 30 pip trading range. That means for 24 hours, you got nothing to do but maybe scalp. I don't scalp. And then when the trades finally do break out and they go where we expect them to, that's when you're going to make the bulk of your profits for the month. Not necessarily all of the money on that day for the month, but what I'm getting at is there's specific times and specific opportunities when the market's going to give you a choice trade. It's going to give you the trade that you can load up on and you can trade aggressively because it's the picture perfect opportunity here. We have volume levels come in. We've got participation. We've got the full setup at the end of the day. We know what tomorrow is going to be like. We know when to get in. We know where to take profits. And we can take a bigger piece of these moves when they develop. Let me show you another trade here on the pound dollar. So this is the pound dollar. Let me switch to the daily time frame so I can walk you through the trade here. There's a lot of movement going on here. But this was, again, a trade that we executed off of the 4-hour time frame. So the other day, we were noticing how the candles were closing up and into this resistance from the I believe it was the 21st of October. And then on the 4-hour chart, I mentioned we trade off of the daily and the 4-hour chart. So again, by doing that, we're slowing down the demand for having to process information fast, right? When you're trading off of a 30-minute time frame, or even smaller, or even a 1-hour chart, and you're trading around the New York session news, you've got all these different price levels. You're not too sure which currency pair to trade. Things look a little confusing, maybe choppy, sideways, consolidation, whatever the case is. Then economic data hits. There's a lot of split-second decisions that need to be made. And it's easy to make a lot of mistakes. So this trade we executed this trade actually on a 4-hour chart, but we could see that we were waiting for price to eventually turn around and go right back up and close above that resistance at the 1.3012. So there was the 4-hour candle right there. That was my continuation breakout trade. That put us in the trade at 67. The first target was 80. The final target was the 00. It was basically that easy. And you can see from the time we got into the trade, the next 4-hour candle, that candle right there, the open was at 57. The low was 56. It only went down 1 pip, the opposite direction. The stop wasn't even involved. I mean, it was nothing that we never even had to worry about. Now, I'm not saying that every trade like this is going to move this way. Sometimes they're going to take a little bit longer. But consistently, when we get a 4-hour or a daily candle pattern like this, based on my trading system, and I walk you through the steps of whether it's a reversal or a breakout, you're going to see more consistent, more fluid price movement to these expected take profit levels, and there's less to worry about. When there's less to worry about, you're not likely to go back in and change your mind and change the plan and, cut the trade off too short, with very few profits, and then watch it go even further and further and further where everybody else is making money, but you're not. You're not going to be in that situation. This is all about developing confidence and knowing that you're trading it with me. You know that you're trading off of a much better time frame. You're not as stressed out having to make that split-second decision. I mentioned that there was 4 trades. There was a trade here today on the euro dollar. There was a 4-hour trade here last week that set up. This was last week. This was a bounce. You may have seen this in a video earlier. And this put us in a trade the following week on Monday right here. This is the 4-hour chart, euro dollar. So this was actually one of the first trades at the beginning of this week. The entry was 31. The first target was 50. The final target was 80. He traded it straight to the 80 final target. Again, these take profit levels. I repeat this strategy, this system, this behavior over and over and over again. I've been doing this since 2001. I trade off of support and resistance. It's important. I pay attention to volume. I pay attention to the amount of participation. These indicators here just give me an extra, form of confirmation, but they certainly don't dictate everything that I do in my trades. It really is all about support and resistance. That's what my trading system is built off of. I'm either going to trade off a bounce off of support or resistance, or I'm going to trade a breakout. That's really all there is to it. And even if it's a retracement after a breakout, that's still a bounce off of support or resistance. And you know how that works. If you've been trading for a while and all of this information resonates with you, you know what I'm talking about. And you just might need somebody who can help you provide the structure and to be there with you, to give you that extra sense of confidence so that you can execute, so that you're comfortable with executing your trades and you're comfortable with putting on slightly larger lot size or positioning, the money behind your trades than you're used to. A lot of people will go out there and run around and they'll do it for years and they'll trade maybe 1, 2, 3% of their account balance. And then they wonder why their account isn't growing.